we have the experience of the first Truffle 100 in France, this year in 2006 and last year as well. I have to say that this Truffle, the second edition, was followed by an aggressive action plan for the public government in France to dig into the details of the conclusion, and as well to set up an action plan. So I would like to first maybe to go on the action plan. First of all, to share some similar conclusion. First of all, it's similarly to in France, but not surprisingly, the market is in a way presented some strengths in terms of structure, in terms of growth, in terms of employment as well. So it's pretty significant that we have an healthy industry. But in the other hand, this market is highly fragmented with lack of European and international champions. So in this way, the conclusion of the Truffle 100 Europe is not far different for the conclusion we got for the French market. Of course, to the same scale, meaning the top 10 or the top European or the top 10 French are pretty different in terms of size. I would like to make a conclusion regarding the action plan, which is, to my view, more important, having said that. So, once we analyze the diagnostic of strengths and weaknesses of the software industry in France, we have taken an action plan, very well structured, that it's a 3-year plan from 2006 to 2008, with two main objectives. First of all, to reinforce the general ecosystem of the software industry. As far as basic issues are concerned, maybe 50% of the software vendors not have any single IP protection, for instance. Many of them are 95% privately owned by one entrepreneur with a lack of financial, which is really basic. And we have some private partners that will be combined to us to deal with. To summarize our plan, it's four main chapters. First is customer access. Many of them told us, not surprisingly, they would prefer 100K of orders from customer compared to 100K of subvention. So it's pretty obvious that we need to favor the access to market with two implications: the public sector, which is, of course, and it's one message we would like to reinforce at European level, which is, of course, the Small Business Act, which is not a domestic issue, even if, as you may know, Ministry of Economy and Finance, Thierry Breton, and Christine Lagarde from the Ministry of Trade Affairs are really well motivated and on top of this topic. But as you may know better than us, that implications are really European. So we really need to have enforcement of the policy regarding the European SBA. And we took our part of the job regarding private company in France to ensure that we have a true interlock between small and large company within the domestic market. But one implication for this important topic, which is our first point of the program, which is market access, it's really the SBA to better access to the public sector. And as you know, it's between 25% or 40% of the IT spendings from one country to another one in Europe. And as for those of you that are not really familiar with the SBA, in the US, the small and medium-sized company in the US in the IT industry, first of all, are receiving a first right to answer to the tender and to the RFP, and that protecting themselves for the competition for outside. And as well, they don't have to be submitted to such a rule reversely in the Europe. So meaning for the software industry, they have what we call the double penalty. Not the right to make tenders in the US and not to have the same competitive environment here in the US, in Europe. So, and the double penalty, it's really a business inhibitor, which is really, really serious. So it's first point, program access. Second point is relative to growth. And to growth, one of the major issues we saw is to develop two sub-programs. One is due to human capital development, and the second one is to favor the channel networking in domestic market, but more efficiently in the European scope, and really to develop a true channel industry in Europe to distribute products and to support products and to service the customer-run products. So it's a second program. In third program, I already mentioned because it was a theme of this two-day session, it was what we call consolidation as far as finance and IP are concerned. And here, it was my conclusion to the last intervention. We really need to set up a true European software patent strategy. And briefly, I will just repeat what I concluded just before. We have three main implications. The first is business implication. Our business is becoming worldwide, so we have to cope with emerging countries, piracy, counterfeiting, mid-market, which is massive, so under licensing, and as well to cope with the US regulation in terms of patent, litigation, compulsion, compliance, and a lot of European software vendors are lost when they are going to the US regarding this US patent regulation. So, and obviously, in terms of business challenge, our business is changing a lot. New business model, interoperation with between commercial sourcing and open source, new business model, online, digital, software as a service, so business driver is changing a lot. Second one, financial driver. Financial driver because it's about the valuation of the IP and the valuation of the assets. First of all, we have the regulations that are coming back, IFRS or US GAAP, so regulation are playing a stronger role to have a better valuation of intangibles. And secondly, when any legal event could occur, merger, acquisition, spin-off, JV, whatsoever, you have to evaluate the IP assets in terms of accountancy. Negative, to avoid to have bad surprise in terms of amortization of goodwill of intangibles, positively to turn IPR into cash. And the third driver, as far as the patent is concerned, is the technological transfer between university research towards the industry, with two implications. One, right to licensing. Second, the valuation of this asset. And the second one is as well what we call in France the PPP, the public-private partnership, with these two similar implications, which is right to licensing and as well valuation of the asset. So meaning, all in all, we really need, as far as these challenges are concerned, to set up a true patents European software strategy to favor the European industry. So it was first legal implication, patent implication, and the second one is pretty obvious, which is the access to the capital market. As I mentioned before, a majority of our software members in France are under capitalized and they are privately held, so the access to the capital market is pretty obvious to develop them themselves. So one, access to customer. Second, the growth strategy. Third, consolidation as far as finance and patent are concerned. And fourth, of course, the innovation and creativity and really to favor the large European R&D programs and to turn into companies, to turn into business, and to favor as well And to our view, it's a side effect, a true European management structure which is capable to set up Europe as a domestic market, as Europe is representing 35% of the worldwide industry. And it's always a paradox that software vendors have to develop itself in its domestic market, then go to the US, then return to the other countries of Europe, which have to be avoided because otherwise we will have the same diagnostics that Bernard Louis mentioned, meaning a lack of champion and a lack of critical mass in the international competition. So in conclusion, as far as European Commission is concerned, first of all, we need an accelerator to the SBA, the Small Business Act, to favor access to the market, first. Second, to reinforce R&D policies. Third, to develop a true European patent strategy. And fourth, to better access to the capital market, which is the three main calls for action we're asking for you and for the European Committee. So thank you for your attention. I think I have 5 or 6 minutes. So
thank you very much.